Last week I was streaming on the YouTube preparing basically my trading plan, and on my Discord I've been monitoring this piece of price action really closely because eventually it became a really great and phenomenal trade, as you can see here, and this is what I'm gonna show you today. I basically catch relatively simple and easy to execute trade, and also how I add to the winning position without adding additional risk on the table. I've been bullish on the gold for quite some time, but this setup has basically testing my patience until the setup has been presented a little bit later the week. But just to build up some narrative for the story behind the trade is, if you paying attention to this piece of price action, what do you see? Do you see more manipulations on the highs or more manipulations on the lows? That is really important for me, because if you've been with me for quite some time, you will know that I've been always saying if you are looking for the longs, you will always be paying attention more to the lows. And if you're looking for the shorts, you will be mostly paying attention to the highs. Because if you want to catch a good setup when it comes to your bias, I always want to see manipulation on the lows before I start to looking for the entry, because that itself will basically help me to prevent a losing trades. So what do we see? We see a strong push to the upside, we coming back down, we having the manipulation and continue to the upside. We have another manipulation, continuation to the upside, and we keep building this particular price action until some target is being hit. And by target, I always referring to some liquidity. And this is really important why I'm saying it, because I basically trade based on the AB logic, basically meaning price moving from one liquidity point to another one. So pretty much everything you see here having very similar, or if not same principle. Every single piece of this price action that will give you a really great setup always has some AB logic. So now let's move into my trade. Basically after this piece of price action and this particular candle, I start to become more bullish. Why? Because we are trending to the upside, but most importantly, this fractal low has been taken out by this daily candle. So I was naturally waiting the very next day to looking for the long setup to take out the previous high. But as you can see, it did not happen, yet I still took a trade. Why? Because it's actually rather simple. Because my bias for the long setup would be invalidated if we start trending much lower, meaning below this fractal. So as long as I see some particular setup in this area, I would still consider to take a trade. A really nice confluence has been, if you paying attention to this daily time frame, we took the previous daily low, but we closed above. The very next day, we traded again below the previous daily low and eventually end up closing above. That itself is a really strong confluence. So if this gotta be my manipulation, meaning point A, the price will likely move to the point B, where is the fractal high. Now let's move into the 4-hour time frame, and basically now in hindsight, you don't even need to go much lower, because this piece of price action gives you all the information you need. So we got the fractal low has been taken by this low and has been taken by this low. If you've been with me for quite some time, you will probably understand a little bit of Wyckoff. So we having 3 pushes to the downside inside my point of the interest, which is really nice and the strong confluence for high probability trades. I was going pretty much to the lower time frame because this piece of price action has been really important for me, and obviously I wanted to have a better risk to reward ratio. But if you would be lazy, which sometimes I am, because not every single day I just want to staring at the chart, and sometimes the trading less or the higher time frame is more profitable for me, especially when I'm traveling and just don't have that much time. So I could catch easily the trade setup after this 4-hour candle closure, because basically closing and overlaying this bearish candle, which is the last manipulation candle. That itself inside my point of the interest is enough information based on my MVM system that will help me to get at least 1.5 R minimum, which is non-negotiable risk reward ratio that I never go below that point. And based on the higher time frame closure, I can manage the position on the way up, eventually up to 5 times risk reward ratio. Just like here, it would just take a little bit longer. Now let's go into the 1 hour time frame. This is pretty much the area where you could take another trade without lifting extra finger and also spending a minimum amount of the time. As we started the day, we basically having some sort of range, and by range I basically mean if we disregard all the wicks on the top and the bottom, we basically having the major volume in this basically range. And if I have a bullish bias, naturally I want to see closure about this particular range. But first of all, we actually drop lower, which you can see we swapped the previous fractal low. But what happened after has been a really significant piece of information for me to decide whether I want to take a long or the short, because as soon as we liquidate or as soon as we manipulate the lows, we immediately start closing above. Not just we close the bullish, but we also start closing outside of this range. And even if I would be really eager and really aggressive to take an entry right here, I would never take a losing position because we never trade below this manipulation. And going for the all highs, it's almost 4 time risk reward ratio. So again, sometimes all you need to do is just paying attention to the 1 hour or 4 hour time frame, because I believe a lot of people, especially those who are interested into the trading, don't have that much time. So I believe this approach is rather simple and really easy to execute no matter the circumstances. You can execute this kind of trade even on your phone while you're traveling. That's why I love this approach so much. Just solely on this 1 hour time frame, you could enter the position after the second confirmation and either keep the stop loss right here or obviously on the latest manipulation, and again the risk to reward ratio would be really beautiful. But eventually my entry has been after this 15-minute candle closure, maybe because I've seen a clean schematic that I used to trade a pretty long time, but also most importantly this V-shape side by side with 1 hour time frame and also 4 hour time frame confluence has been pretty much significant for me. And the last piece of information for executing the trade is we are opening New York session. So we have the technical confluence side by side with the time confluence. These two pieces information are really important for me, and they always increase the probability of any kind of trade that I take. And obviously stop loss right here because I see this move is fully efficient, so there is no need for me to cover entire move on the downside. The very next day I wake up with the profits obviously, so I basically move my stop loss into the break even, or I usually cover it as slightly in the profit to cover my swaps, my fees, and sometimes on top of a little bit of buffer, especially if the move is already extended. Now, if I'm really confident in the trade or in the direction of the trade, I can start scaling or adding to the winners, which sometimes can be really tricky, sometimes can be also really difficult, not just technically but also mentally. But as you can see here, I had only one level that I was paying attention to, especially prior to the news, which was basically right here. And obviously I'm showing it that it's not in hindsight, because believe or not, once you have really well defined system, all you have to do is prepare your plan and just waiting for how the market gonna behave so you can react based on your plan. And once we start shifting out of the zone, this is pretty much where I enter or where I add another position, which obviously has been a little bit lower because I simply wanted to have a little bit buffer, because if I risking 1% right here and 1% right here, obviously my break-even line or my break-even price will be somewhere around here, which is quite a bit close to this current price action. So I just didn't want to risk additional sweep if I'm wrong on the momentum setup, and I just wanted to play a little bit safe, so just adding a smaller portion in this position would help me to manage this trade even better. Because this way I will know, even though I'm gonna be wrong on this trade, I will still end up being profitable based on managing the first position. But obviously both has been such a really beautiful win, because the taking profit, obviously the previous fractal highs. Also, lastly, I added another trade right here, which has been on a different account, but the projection, or basically the idea, was pretty much valid. And as I mentioned, the price is very efficient, so there is no need for the bigger pullback. And also I will be looking if there is only, or if there is at least 1.5 risk to reward ratio. Hope you find it insightful. Maybe check out the Discord if you want to learn a little bit more, and see you next time. Take care.